Just a week or two ago, we were downright salivating over practically any company that's levered to the health of the consumer or the housing market. But thanks to the recent sea change that I've been telling you about all week, where investors are worried about a domestic slowdown, the damage from rebounding gasoline prices, and the potential for rising mortgage rates, everything that was hot a couple of weeks ago is now, well, at least except for today, not hot at all. Which brings me to Pool Corporation, and that's P-O-O-L for all you home gamers. That's the dominant provider of pool parts, supplies, and maintenance equipment here in the U.S. In just the last week, Pool has pulled back from an intraday high of 72 down to just under 66 as of today, as this kind of stock is suddenly going out of style on the Wall Street fashion show I always talk to you about. Here's the thing, though. On Thursday of last week, Pool Corp actually reported a terrific quarter in which it heartily beat Wall Street's expectations and also reaffirmed its full-year guidance. The company delivered an excellent 5-cent earnings beat off a 14-cent basis with higher-than-expected revenues that climbed 10.8% year-over-year. In other words, Pool Corp reported a top-notch quarter, and the stock jumped from 68 to 72 the same day, but then started pulling back, closed at just around 70 bucks, and since then it's continued to get slammed again as money managers rotate out of everything domestic, housing-related, or consumer discretionary spending. So are these traders throwing the baby out with the bathwater? Is Pool Corp the kind of stock that's worth buying into weakness, since we know the underlying company's doing quite well? Let's check in with Manny Perez de la Mesa. He's the president and CEO of Pool Corp to find out more about how his business is doing and where it's headed. Mr. Perez de la Mesa, welcome back to Mad Money.
Thank you very much, Jim. Glad to be here.
All right, sir, I think you have huge upside because I'm looking at a chart from your deck which shows that we are still building almost a third of the pools that we used to build. You are predicting a return to normalized levels of pool building. When will that occur, do you think?
We believe that'll occur early in the next decade. We believe that given the financing environment and giving consumers propensity to invest in their homes and the recovery of that investment, that'll begin to kick in gradually over the course of the next 2 to 3 years, gradually increase and get back to normalized levels early in the next decade. But as you said, we have a lot of wind behind us, given that we're only running at about 1/3 of the pool construction levels that existed 10 years ago.
Now, were you able to take advantage of the fact that a lot of the mom-and-pop pool builders were not able to make it through the depression that occurred in housing?
Well, certainly a number of our customers were affected to varying degrees, and there was some fallout. But what we do in terms of helping our customers, whether they be pool builders or retailers or service companies, what we do to help them grow and succeed has resulted in the lion's share of our customers being intact. And in fact, we continue to gain share because of the value we provide to our customers.
Excellent. Now, we all know that California, and I know it was brought up in your conference call, California's got water restrictions, and people are supposed to cut back by a gigantic amount. What does that mean for the pool construction business?
Well, ironically, to date, we are doing very well in California this year. California, obviously, is a very important market for us, the largest pool market in the country and, in fact, in the world. So to date, we have not seen any impact from that cutback. When you look at pools are not a net consumer of water. I mean, you have evaporation and you have the actual filling in, but really, there are many, many opportunities that California has to cut back on water other than cutting back on new pool construction. Just let the prices go to market, eliminate subsidies, and you're there. We also, by the way, on the irrigation landscape side of our business, sell smart irrigation products. And with smart irrigation products, consumers, commercial properties, agriculture can be much more efficient in water use. And that goes a long way to solving California's water issues.
Excellent. Now, I also was surprised when I read the deck. Weather is more important than employment. I mean, weather is actually a big driver of your business.
Well, weather affects us primarily in the seasonal markets. So where you live, when you open your pool, is driven in large part by weather outside. This coming weekend, you're going to have a great weekend. And if you haven't opened up your pool, you should have. So therefore, that affects our business in the sense that the earlier pools are opened, the more pool products they're going to consume, and that's good for us. So hopefully you're enjoying the outside and the outdoors this weekend.
Last question. Chlorine. I know the chemicals are important. I know that Dow Chemical recently combined with Olin. Are you worried that the chlorine industry, which they've always been going against each other, is getting too concentrated for your company?
No. Ironically, the chlorine market on a worldwide basis is oversupplied. Okay. There are manufacturers in China, Japan, and Spain, 3 examples other than the United States, that are large chlorine producers. The oversupplied conditions net enable chlorine to be a very efficient sanitizer of water, both for recreational water as well as for commercial properties.
All right, terrific. Well, I got to tell you, I think that the construction of new pools is going to come back big in the next 4 or 5 years because of the value that they add. I think you're dead right. This is Manny Perez de la Mesa. He's the president and CEO of Pool Corp, P-O-O-L. Thank you so much, sir, for being on Mad Money.
Thank you, Jim.
Look, these stocks went out of favor rather fast. They're going to come back in favor just as fast. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.